Let's get back to markets then. Jindal Stainless, that's flying away in trade. Mr. Anurag Mantri, the Chief Financial Officer and Executive Director of the company, joins us on the show. Hi, Mr. Mantri. Good morning. Thanks so much for joining in. Well, the street likes the EBITDA per ton improvement and margin improvement that we've seen on a sequential basis. So the two basic numbers that we're looking at is what kind of a volume growth are you looking at for this year? And out of that volume growth, if you could break it up for us, how much of the contribution will come in from exports, which was subdued because of the duties in the last year? So what does that number go to? And the EBITDA per ton broadband.
Okay, thanks, Nigel. So on this year forecast on the volume, what we are looking at, because our new capacity has also come into place. So just to tell you that we commissioned our new 1 million ton plant in March, well within the time. And with this, we are now into the top 5 stainless steel player in the world ex-China. So this is quite a position for an Indian company to get into such position, and especially for Make in India efforts for the government. With this, what we are looking at, we will be able to deliver at least 20% volume growth in FY24 over 23. So this year also, actually, if you recall, we initially guided for flat volume growth, but we still managed to deliver almost 8% volume growth in this year. And we are further guiding that at least 20% volume growth can be delivered by us in FY24 over FY23.
Yeah.
On EBITDA per ton, sorry, go ahead.
Yeah, EBITDA per ton. We want to hear that number. Eager to hear it.
Okay, so EBITDA per ton guidance, we were guiding around 20,000. Now, what looks like, it's a bit early because a lot of, especially in our export market and US debt crisis, we are still not sure how the market in the exports, especially in US and Europe, which are large key export geographies, will pan out. So we are just broad bracing our guidance on 19 to 21,000 range. So we are quite sure of delivering these numbers. But I think since it's a bit of the start, I would like to be more on giving a broader range of 19 to 21,000 of EBITDA per ton guidance.
All right, so 20% volume growth is what you can do with 19 to 20,000 per ton in terms of EBITDA per ton. But it's interesting because 19 to 21,000.
Right.
Perfect. You earlier had guided for flat volume growth and you said you've done 8%. Now you're guiding for 20%. Can we expect you to outperform on that or not is the question. But, what about the Jindal United Steel acquisition, the JUSL acquisition? When do you think that completes? And once that does complete, what is the kind of potential EBITDA from that?
So that will be completed within this quarter. I think next one and a half month we will be completing this acquisition completely, and this will add to around 3,500 rupees EBITDA per ton to overall JSL performance. So what I am guiding, you can add another 3,500 coming from JUSL on a per ton basis post acquisition from JUSL.
Okay. So we'd like to understand, not on a per ton basis, but on JUSL, what kind of an EBITDA number can it contribute? That will be better for us. Last year, if I see it, you delivered around 710 crores. This year, what kind of a contribution comes in from JUSL, and post consolidation, close to 1,900 crores of debt as well will come on the books, right, from this asset?
Right. So JUSL standalone EBITDA will be in this year what we are expecting in the range of 800 to 850 crore. So against the 700 crore what we delivered in FY23.
Right. Looking at your balance sheet right now, your debt is closer to around that 5,000 crore mark. Is there any scope to reduce it from this mark? What's the capex plan that you have for FY24? And the reason why I ask this also is because once you complete the JUSL acquisition, they too have around 2,000 crores of debts on their books.
No, so let me put the numbers right. On standalone without JUSL, in fact, last year we were into capex cycle. We were expanding our capacity, doubling our capacity in Jajpur. And despite that, we have managed to reduce the debt from 3,200, which was last year in FY22 end. We closed the FY23 with just 2,600 crore of debt, fund-based debt. So that's a good 18% reduction despite being in a capex cycle. JUSL has a close to a 1,950 crore and 2,000 crore debt. With this, the number now stands at close to 4,550 crore. So that's a good number, and the debt equity also, if you see, has improved further. which was in FY22 and it was 0.3, now it's 0.2. So
there won't be any reduction from current levels, is it? There won't be any reduction from this 4,500 crores that you're talking about?
See, from current level, no, not immediately, because we have two acquisition payments which are there, the JUSL as well as our Indonesia acquisition of nickel asset, which is there. So we have close to 2,500 crore cash outflows in this year. So which will largely be funded from internal accrual. So that reduction is not expected from this level, and which is a healthy debt mix. In fact, on the intermittent period, the debt could go up by around 500 to 700 crore depending on the time of these payments.
So ballpark, the debt number by the end of FY24 will be 5,000 crores.
Yes, I think not more than around 5,000 crore.
4,500, you're saying it goes up by 500 crores, roughly around 5,000 crores is what it looks like. Final couple of questions before we let you go, Mr. Mantri. One is on the promoter pledge. Then the consolidated entity, I see the promoter holds close to 58%, but some part of that appears it's still pledged. So is there a plan to release that? Point number one. And the second factor, some part of the street is a little bit cautious of what the promoter intent is, because they're looking at setting up a steel unit, I understand. Any contribution from these assets? That's, the listed entity JSL, because some part of the street is a little bit cautious. What if the promoter concentrates too much on that steel asset?
Okay. So on the pledge side, we have made a good progress. So all the term loan, now there is no pledge against our term loan of the company. So lenders have removed all the pledge from the term loan, and it's now only left with the working capital loan, which we are also further progressing well and hope to get it resolved soon. And just to reiterate for our minority shareholder that these pledge has no margin call, and there is no additional leverage at promoter level against these shares. These are only pledged as a collateral to the company's working capital requirement. So there is no and not as a primary security. So there is no risk of margin call at all. But having said that, with lenders have already removed it from the term loan, and soon I think we will progress for getting it removed from working capital also.
All right.
Your second part. Yeah. Okay. Go ahead.
Complete that point, sir.
On promoter intent.
Second part is that I can assure you that there is no funding from JSL to any of the promoter entities. It's completely JSL business. JSL, all cash are deployed in JSL business. Nothing goes out of JSL to fund any of the other ventures.
All right. Just one quick one before we let you go, Mr. Mantri. You paid dividend after 15 years in April 2023. Now you've said that, a lot of the cash will be deployed into making these acquisitions, the capex that you have, which will be internally funded. So should investors wait for one more year for the dividend to be paid, or now the dividend payouts will be consistent and regular?
We hope to have a consistent dividend payout. We have declared the policy, but obviously it's a board, depending on the results and the board prerogative. But I think the good part is that within a month we declared 2 dividends. So as after 15 years when we started, so that should be given some direction to that. I think the board's intent towards how to reward the shareholder. So that's what I think we should wait for, how the results work out and how the time moves.
Okay. All right, Mr. Mantri, appreciate you stopping by and giving us all those details. Looking forward to chatting up with you sometime during this quarter. We'll slip into a short break, come back, continue to focus on markets and stock-specific action.